This video is sponsored by Gate.io. If you set an account up using the link in the description, you'll get 25% back on all your spot and futures fees for life. Gate.io.
Hello everybody, welcome back. Let's have a look at Bitcoin then after this little pump that we've had. And again, it is a little pump, it's nothing special. The wick low to the wick high was only just less than 5.5%, so it's not massive. But interestingly, probably just anecdotally really, the wick low on this last move down was higher than the previous one, and both of them have front run the 28,500, which is like a major area for me of the support. So if we lost this area, I would have taken a position around this level, and this is still definitely on the cards, even if it's not immediate. It will be, I reckon we'll see this at some point this year, and if we don't, no big deal, but if we do, I'll take advantage of it. This little green line isn't just here for a laugh. This is here for a good reason. We had the 3-day golden cross. Golden crosses love to get retested. Currently, the 200 and the 50 exponentials sit around this level, and that would be a bullish retest of a significant golden cross. Golden crosses are good, obviously, we all know that, but they're better when they get retested. So to see them form is definitely bullish. But to have them retested is the opportunity. So if you have bought prior to the golden cross, months ago or the beginning of the year, it's a win-win really. But if you haven't bought Bitcoin, you want to get your foot in the door, it's still a good setup, but you want to see it retested. So that sits down here at this exact level, currently 27,700. And I would actually buy some more around there, and I would take positions around there. But at the moment, I have to say, if we take the chart on face value, which we will do for the moment, and we'll move into traditional markets after this, Forex and stocks. If we take it on face value, it actually looks quite good. On the Ichimoku cloud, we've even got a trend signal form. So the conversion baseline crossed above the cloud, the price actions above the cloud, and the cheeky spans above the price action. So provided that we remain in this situation, and the only thing that's going to cancel this chart, this setup out, would be if the cheeky span touches the price action, which would happen at this level or lower in 4 days, or we'd have to sink down another 2.5% back down below 29,000 on the 4 hourly. That would cancel this signal out. This is a signal itself, to be fair. At the moment, this looks like it wants to trend. It does look like it wants to continue to trend. And on the 4 hourly, we're above all moving averages, currently speaking. Currently speaking, we are. So it's still quite good, I have to say. Money flow index is high, but it's not overheated. There's no bearish divergence on this run up. It's all still quite fresh and new, really. It's only taken a couple of days for this to happen, so we don't really have any of that. So I am actually looking for this to continue up at this point now. And last night we were doing the live stream for Patreon members. If you want to join the Patreon, this is where you can ask me questions on whatever chart you want me to look at. We do that twice a week, Tuesdays and Fridays, so there's links in the description below. But last night we were watching this pump as it was happening, and I wasn't particularly convinced it will go any further, but one of the main things we have to wait for would be for candles to close. Candle body closures count for a lot, and so far, looking back now that we've woken up in the morning with fresh eyes and we've got these closures, we do have the trend signal in play that took place overnight, which is very nice to see. So the 4 hourly is kind of positive. Obviously the 3-day shows that bullish golden cross, even though it does threaten a realistic move back down into the mid 27,000s. Still looks quite good. So with that, we'll just take it to a daily to see what she's saying. And obviously, we've reclaimed all the moving averages. We're above all of them. The Bollinger Band sitting down here at 29,400, which again, if we were to pull back into that area, we still wouldn't cancel out the golden cross if we were to do it today or tomorrow. Basically, if we're going to pull back into it, we've got to do it within the next 4 days. And then that would probably be an area to try from. We've got the 10 exponential, we've got the 21 here, we've got the 20 simple moving average, you've got the 50 exponential moving average, all hanging around still above that area on the 4 hourly to allow for that Ichimoku cloud trend signal to continue to play. So it's still quite good on the daily here, not a problem. And actually, if we look at the way that this consolidation has formed since we've been moving down from this previous local high, it is the Bollinger Band, the 20 moving average on the daily, that's more or less kept us down. And yesterday shot straight above it, today opened above it, and if we come down to retest it and get supported on it, I'll be looking for the trend to continue. So over the next 2, 3, 4 days maybe, well, we really want to see it happen in the next couple of days. Ideally today or tomorrow, really. It might be derivatives time. It might be futures time. give yourself a little try around here. The reason why I'm touting that as a good idea is because it wouldn't take long to know if you got it wrong. You can have a nice tight stop loss around these zones here, around 29,400, maybe even 29,300. You take your position around these areas, and look, if we start to sink down lower than that, especially towards and below, well, we'll call it 29,100 or something like that. If you start to close or move down towards that, it probably is a failed rally and we'll just continue down, and this is nothing more than a liquidity grab, which again is absolutely perfectly fine, because I'm not convinced that all markets are ready to have another leg up. I know we've got the CPI coming out soon. I don't think the CPI personally is going to be able to incorporate the rally on oil yet, but it will. Eventually, it will. It doesn't seem much, but you go from we're basically looking to break out from here, and that's going to definitely filter through to the CPI moving forward this year. If we break 83 and remain above 83, that does put oil pointing towards $100 and maybe even higher. So that is real. That's real. But it's still too early to say. I'm pretty sure that that's not going to be part of this CPI that's going to come through. But what we're looking at here is a potential problem with CPIs coming in through for the rest of the year. And that is going to affect stocks most likely, because it will affect the dollar most likely. I don't know if the Fed will have to adjust their outlook on raising rates, if they're going to continue to raise rates as a result of CPI going up, or if they're just going to allow for inflation to meander with oil prices. I don't know. I really don't know. I have no idea, and it's mad to try and put yourself in their shoes. The stock market is definitely more than healthy on the face of things, because we've had the rally since the beginning of the year and it's done very well. But personally, all good things do come to an end, and my preference has always been, for the last 2 to 3 weeks, maybe even longer than that we're going to get a rotation from stocks into commodities like gold, and obviously oil is already feeling that, but I don't think that's part of the that's not part of the rotation. If anything, this is going to maybe begin the rotation, because obviously oil, the price of oil is fuel, and there's no commodity out there which does not take fuel to either mine it or chop it or process it. It's going to be added onto the price of all commodities. All commodities are going to feel the price of oil and pass that expense on, so it's all going to be priced in. So I believe still in my own BS, which is that we're going to start to see commodities move up, and if that's the case, everybody's been making a lot of profit on stocks, and it might be reasonable to think about shaving profits off and putting them into commodities. So again, this is all it's going to be like a self-fulfilling prophecy, like a vicious circle, when commodities start to go up, and that's going to all impact inflation as well. So, whether it's steel or copper or wood, whatever, it's all going to be everything, absolutely everything. The price of grains, everything is going to go up with oil. And again, oil is teasing us at this 83, because if it does break, then it gets particularly nasty. And it looks like it probably will break, to be honest, but it hasn't done it yet. So we'll see. Anyway, I've positioned myself appropriately anyway into commodities and commodity stocks. So I'll leave that with that there. So that's the same old, nothing new there. The euro finding itself a little bounce so far on the 4-hourly. That's quite good. Coming up to the Bollinger Band Centre. Death Cross retest sitting up here at just short of 110. That's okay. And if we get back above there, then we'll be looking to turn around already and continue with another run up towards 111, 112. But again, CPI will probably have an effect on this. So I'm not looking to trade for it. We use euro as a way to. Wow, what's the best way to describe it? Really, it's like a format, isn't it? Really, for all markets, because it's such a telling chart for the way that the Dixie is going to go. It's basically the inverse Dixie, isn't it, really? So what we're seeing here. And the Dixie finding itself a 4-hourly golden cross, moved into it, starting to go up again. Now, I reckon the Dixie will fizzle out, if not already, and then get a bid lower, and then continue to move up towards the top of this descending triangle, which at that point we'll see if it's able to break or not. Again, a lot of it is going to rest in the hands of the CPI, which is, again, I'm not convinced that it's going to be hot or cold or even just neutral. Not this one, because the oil price is likely to filter through into the next one and the one after that. So we'll see. Again, markets are still behaving kind of normal, and I would even go as far as to say, if you wanted to, it might be a buy the dip on stocks even now. Not that I would do it, but things like the S&P still looks like a buy the dip to see how high it can go. I know Bloomberg have been talking about 5,000 for the next peak on the S&P, which again, my skepticism on that is that hearing big outlets like Bloomberg talking about actual price targets, I feel like it's probably not going to happen, But either way, long story short, if we're focused on Bitcoin seems okay, provided we're above this Bollinger Band on the daily, which would allow the 4-hourly trend signal to play. And at the moment, it does look like we've broken this downtrend already. So give it a couple of days to see if it's got legs. If we do come down further, worthy of trying a position, tight stop losses obviously around this area, and we'll see how high it can go. I wouldn't be looking for something massive on this, but if it did move up to its previous support, it's a resistance, and then break that, then we might see a blow off top in the mid-30s where a consolidation really does kick in. But for the moment, it does look good. The pump looks real. I know that sounds crazy, sounds mad, sounds like hoping, but it does look real. How it will affect altcoins, your guess is as good as mine. We looked at a lot of charts yesterday, and there was a couple that stood out. Chainlink was quite good. StormX was really good as well. But that doesn't mean a great deal because they all still hang in the balance of Bitcoin's overall health. But yeah, there are some setups out there that look good. But for the most part, altcoins really did look wrecked. And I wouldn't particularly be bothered about trying to make a successful trade on them. If anything, it's just a matter of dollar cost averaging on the way down. And we could still see pullbacks between now and the end of the year of between 30 and 50% on some of these alts. But as I keep trying to explain to the Patreons, the idea of risk to reward on some of these trades is still good. So if you buy now, you risk a 30 to 50% pullback, but ideally the targets are about 500 to 1,000% gain over a couple of years. So that is decent risk to reward. That is, this is crypto gains and crypto losses, I suppose. So we're not talking derivatives, we're talking spot. So we're talking relatively favourable risk to reward at today's price. So this is why dollar cost averaging on the way down from now is definitely the best strategy for a hodl, because if you buy today, buy next week, buy next month, and it keeps going down. Like Matt Damon was saying, fortune does favour the brave. You've got to be brave and buy into this, but if you stand back and recognise what it is that you're doing, it's very good risk to reward. Right, I'll leave it with you there. Thanks for watching. I hope you have a nice day. Take it easy.